Welcome back to the Red Jacket Lawyer for another video on German company and civil law. If you like the channel, don't hesitate, feel free to subscribe. If you like the content, please give us a like. Today we are going to talk about 4 different types of German corporate structure. They all form part of what's known as capital companies, and we will focus on those. The main types that we will come across are commonly abbreviated as GmbH, as UG, as AG, and as KGaA. And I'll take you through the double Dutch as we proceed and let you know what is hidden behind those letters. What they all have more or less in common is that they deal with limiting liability, that they deal with minimum capital requirements, and that there are requirements on how they need to be operated on a day-to-day basis. Let's start with the GmbH. GmbH is an abbreviation for the German term Gesellschaft mit beschränkter Haftung, and it literally translates into English as company with limited liability. In day-to-day practice, the GmbH is the workhouse of German corporate structures and environments, and it provides the backbone for most of Germany's small and mid-sized businesses, for family businesses up and down the country. If you're coming from an English or American background or have acquainted yourself with their respective legal systems, you will find that it is akin to an LLC, limited liability company in the US, or a private limited company, LTD, in the UK. In practice, it means it's flexible, relatively easy to run, and it enjoys the protection of the corporate veil and shields against personal liability. What does that mean? That means that shareholders, so the owners of the company, are not personally liable for the company's debt, and if a company falls into a state of financial hardship, creditors can go after the company, they can go after the assets of the company, but they can't go after the entrepreneur personally. That is, unless the entrepreneur has contractually signed guarantees or the like, which is outside of the corporate law. But if you stick strictly with the corporate law, as a shareholder, you're only invested and liable with the minimum capital, or with the capital that you have invested. The minimum capital for a GmbH is 25,000 euros. So think of this as the startup funding that stays in the company. And effectively, you don't necessarily need to have the full 25k up front. If you have half of that, you can still register the company, but ultimately 25k is the baseline, and you really need to put that in at a later stage. We will do a separate video on the GmbH, and we will address that issue in more detail in the GmbH video in the future. In terms of corporate governance, a GmbH is managed by at least one or several managing directors. The German term is Geschäftsführer, and they run the day-to-day business. They are appointed by the shareholders, or the single shareholder, as the case may be. And unlike in bigger corporate structures, and we will get to those in a moment, GmbHs are not usually required to have what is known as a supervisory board, a body that takes a controlling function in respect of the directors. And on the whole, GmbH, particularly if the director is also the shareholder, is very flexible and responsive and quick and easy to run, and that is the reason why it is so common. The drawback that you may face with a GmbH if you're thinking of a startup, if you're thinking of growing, is that you can't transfer shares as freely as with other structures. Normally, if you want to sell shares, you need to do that in a notarized deed, so on a case-by-case basis, basically. And you can't list a GmbH on the stock exchange for public trading. So they are the limitations, but there is of course a way to convert a GmbH into a tradable structure in its life if the need arises. I'm sorry, I've got a bit of a cold. The GmbH is very closely related to the second type of company that we want to look at, which is known as the UG haftungsbeschränkt Unternehmergesellschaft, which basically means entrepreneurial company with limited liability. What it effectively is, it is a GmbH with heavily reduced capital requirements, and in theory at least, you can set up a UG, a entrepreneurial company, with as little as €1. In practice, this is unlikely to work because you have to meet costs, etc. on incorporation, and clearly those costs will exceed your euro, but the message is clear, you need very little company. Other than that, it is very similar to the UG, so I won't spend too much time talking about the UG. The only thing worth noting really is that for the UG you need to put 25% of your annual profits in a reserve until you've grown to the 25k capital that a GmbH needs, and that's why the two are very similar. A UG is basically a mini GmbH designed to grow into a GmbH through accumulated reserved profits over a period of years. So depending on how big your profits are, that may be a slow process or it may be a long process. If you get there, hopefully, of course, that is. And those rules are non-negotiable. You need to put that money in the reserve, and once you get to GmbH level, you then have the option to convert your UG into a GmbH, which generally is advisable because everybody knows that UGs tend to be a bit thin on the capital, and the GmbH just has a better reputation. So if you get to that point, it's worth considering. And again, we'll do a video on the UG. Which takes us on to the AG. AG is the abbreviation for the German word Aktiengesellschaft, which can be translated into stock corporation or joint stock company. And that is the corporate setup that is really designed for big players. And to name but a few of the German famous AGs, you can think of Siemens, you can think of BMW, you can think of Allianz. They are all AGs, and they differ substantially from the GmbH in that an AG requires a minimum capital of 50k, so that's twice as much capital as you would need for a GmbH. They, by law, need to have a dual management structure with a board of directors known as Vorstand and a supervisory board known as Aufsichtsrat in German. And the supervisory board commonly reflects the shareholding in the company. It may even have employee representatives on board, and they review the conduct and the work of the directors, and they can have powers to appoint and remove directors. And the minimum strength of personnel just for the supervisory board is 3 people. So you have a lot more overhead from the outset just on staff, and then we haven't talked about things like compliance issues, things like accounting, auditing, etc. So that's much more heavyweight, but the benefit is it is suitable for public trading on the stock exchanges in Germany or possibly internationally. And if you're looking to take on board third-party capital, then an AG may well be your vehicle of choice. And again, there's going to be a video on that as well. Last but not least, today we're going to look at the KGaA, which abbreviates Kommanditgesellschaft auf Aktien, which is admittedly a bit of a mouthful, and it translates basically into partnership limited by shares. Now, if you've been watching out carefully and you are good on your linguistics, you probably worked out that shares is the English word for the German word Aktien, because Aktien now appeared twice, once in the AG and now in the KGaA. And it's a somewhat unique corporate structure, I think. It's a hybrid, or the love child, depending on how you like to look at it, of a partnership and on a stock corporate company. It's like having a limited partnership in concept, and then the general partner being on board for the heavy lifting. And what you do is you have a general partner like you do in a partnership, and we will look at partnerships in separate videos. You have a general partner who has all the liability and who does all the management and who calls the shots. And the general partner can have limited partners through shares. So limited partners can buy shares in the KGaA and participate in profits, limit and shield themselves against from liability, like if they were in a stock company. And they don't in turn have managerial control. Again, a bit like in a corporate, in a stock company, the minimum capital for KGaA is 50,000 euros. And it really is a structure that lends itself for taking on board capital without giving away control. Quite often it is used for family businesses that have grown to a level where they need to take on third-party investment, but where they really want to retain control, and that's a way of taking investors on board. And there you have it for today. In a nutshell, and to recap, German capital companies come in broadly 4 shapes. You have the GmbH and the UG, which are related and more suitable to small, medium-sized businesses. And then you have the AG, which is the capital big boy. And then there is the KGaA, which in a way allows for a bit of both. We hope you like what we've shown you today. I see our video is a bit longer, like the first one was. I always aim for 10 minutes. At the end it seems to be a bit longer. If you've got criticism or requests for further themes, let us know. If you think we can improve, we always want to improve. Other than that, for today, it's Auf Wiedersehen. Bye bye.